If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you. All right, live from the phone booth in the Centurion Lounge in LaGuardia Airport. This is Help Further. What's
Phone
up, Vic?
booth looks pretty nice up there.
It is pretty nice. It is pretty nice. I didn't know if I was going to have a space. I knew they had one, but they only have like two. So when I came in, I just jumped in here, ate dinner, and I've been squatting on the space until we started hitting record.
So how was New York?
New York was great. I was up here for my first board meeting with IntisCare, Fund One portfolio company. They are so impressive. Deerfield is the lead VC on the deal. So I got to see the Deerfield office, and the best thing. I mean, there's a lot of nice things about it, but for me, the best thing is they have a gym, like a full gym inside of the office, right next to the full chef, kitchen, and in the full gym, they've got a jiu-jitsu mat.
Oh, that's pretty cool.
Yes, it's so cool. So apparently the one of the big MDs at Deerfield is a jiu-jitsu player, brown belt, and so they have a club there, and a bunch of people do it. So that was super cool. I'm gonna have to email them and ask them if they ever have a co-investor.
Did you train and roll around a little bit, or not?
I didn't even know about it until I got there. It just sort of came up because everyone was talking about what they were going to do for the weekend, and I was like, "Well, I'm going to Dallas for a competition." And they're like, "What, jiu-jitsu?" And then the receptionist who was like setting us up was like, "Oh, I'm into jiu-jitsu too." And then he starts telling me all this stuff, and then so it was crazy. But really excited about IntisCare, and then Fund 2 is in business now, right? So
yes, congratulations, you had your first close. Exciting.
Yeah. So we're just kind of doing all that kind of stuff. So
yeah.
Good.
Okay,
how about you?
Stories. So let's dig into them.
All right, let's dig in. All right, let's start with the economy, Vic. Talk about what's going on with bond yields.
Yeah, so the Wall Street Journal had this story. The deficit threat is driving bond yields higher. So the Fed, of course, cut rates a couple of weeks ago, maybe a month ago now. You would expect bond yields to go down, and you can see from this chart they did come down. That this big down right here, I think, is right when they did it. But they're coming back up, and I think it is. I mean, the story says it's because of the deficit and kind of inflation fears, although we'll have a story in a minute. Inflation has not really come back up. The bond yields are important because that's what actually drives the cost of borrowing in the market, really. The Fed funds rate is supposed to affect bond yields, which then is what banks use to charge, interest rates.
Right.
So that is, it's not going to be as accommodating if bond yields keep going up like that.
Yeah. I mean, we cut rates, we've got inflation down, bond yields were going down, but now they've spiked back up throughout October. I mean, how much of that do you think has to do with just volatility and fear around the election? I mean, everyone's talking about the deficit, but it also feels like everyone's pretty on edge about the election.
Yeah, I think the election being over, assuming we know who has won by next week sometime. I don't know if we'll know Tuesday night. Maybe we will, but I'm hopeful that Wednesday or maybe Thursday we'll have a good understanding. I think that'll sort of just calm everyone. We can all get ready for whatever the new administration is. Almost, I don't care necessarily which it is, just the ending of all the mudslinging campaigns on both sides, I think will be good. Part of what I think the bond market might be concerned about is that either way, whether it is Harris or Trump, the deficit is not likely to be addressed. I think both are the Republicans will cut taxes.
Yeah, but they're both going to spend.
They're both going to spend. I mean, they'll have different tactics, but I haven't seen a credible plan from either side to really cut the deficit in any meaningful way.
Yeah, that's right. All right, let's move into GDP growth.
Yeah, so GDP growth was pretty strong, 2.8% annualized rate, a little bit less than last quarter, which was 3%. And economists were expecting 3.1. But still pretty strong growth. And so that feels good.
That's great. That's great for the U.S. economy in a time of a lot of instability, really around the world.
Yeah.
It's certainly a bright spot for us, right?
Yeah. You can see that some of it was the federal government, consumer spending on goods. I don't know why that's was really high. So
That's
investment, private inventories and investment were down, but overall good. And then inflation today, the PCE came out, which is different than CPI. And this article, and I've heard rumors about this too, the Fed thinks that's a more accurate portrayal of inflation.
Mm-hmm.
Either way, it was good, 2.1%. I think everything seems, except for the bond market, which no one controls. It's just like this, market-based thing. Everything seems to be heading in the right direction, really.
Yeah, I mean, if you're someone looking to the numbers for how the U.S. economy is doing going into the election, between the stock market, inflation, and GDP growth, everything is in pretty good shape right now.
Yeah, and there's a lot of earnings this week, and I'd say we'll go through them each, but in general, the earnings were pretty good.
Yeah. Yeah. Now we talk about the K-shaped economy and why, it's hard for these numbers to actually mean exactly what we think they mean. There are also changes happening in the workforce. We're definitely seeing large companies get much more sort of bold in their demand for workers to come back to the office. We know Andy Jassy sort of said, hey, you got to get back to the office in January, otherwise, plan on having a different job. The Wall Street Journal had a story talking about that and how that's actually going to provide a better environment next year for commercial real estate.
Yeah, that's right. So that is, we see the high profile names like Amazon, but I think broadly, this story is talking about the kind of work from home has peaked, and now people are starting to be asked to come back 2 days, come back 3 days. A few companies like Amazon come back full time. And so, while that might be frustrating for an individual worker, I think it's good for the real estate market because you then need to have office space. So hopefully that will help with the real estate challenges that we have.
Mm-hmm.
But yes, there's a couple layoff stories this week. So Visa laid off 1,400 people, which is not a huge percent of their workforce. A few, I think it was single-digit percentages, but still a large number of people.
Right.
So again, the K-shaped economy is kind of bearing out. If you have a lot of assets in the stock market and you have a job that's safe, you're okay. But if you get laid off and even inflation is down to 2%, that still means the prices that were already high post the pandemic, they're not going down. They're still going up each year by a little bit. That's sort of bearing out in this.
Yep. And look, the stock market is also still very value oriented. I mean, I think we're going to go through the tech stuff and we'll start to see that there's starting to be, I think over the last couple of quarters, really some questions about AI in general, right? Even for the NVIDIAs of the world, where the PE ratio is probably pretty great. It's also just a question of how sustainable is this? How good is the moat? And how much is this actually going to get activated in the economy?
Yeah, that's right. I mean, I think we're spending billions, probably 30, 40 billion a quarter on AI kind of CapEx investment. It hasn't really flowed through to revenue and earnings yet. Now, of course, if you get to AGI and you have a new tool that can do lots of things, you could catch up quickly. We'll talk about it in a minute, but Google talked about how they're using AI. But Dropbox had a layoff too. You found this story.
It's in the top. It's 20% of their staff. So 528 employees, but 20% of their business. And look, I mean, Dropbox is not Google, but I mean, they had roughly 2,500 people, and 500 plus of them are no longer employed. So that's a big slug of people for, I think, a pretty well respected tech company out there.
Yeah, and so now let's talk about Google. Google did well. Their cloud revenue grew incredibly fast. Do you know YouTube brought in for the last 4 quarters, so last year, $50 billion, just YouTube itself,
Yeah, it's amazing.
which of course is part of Alphabet. But I looked it up. Netflix, which is the second biggest video platform, has like 37, 38 billion annualized revenue. So YouTube is if it was by itself, it would be the biggest streamer out there, and it's part of Google. It's not even the biggest part of Google. It's incredible. But one of the comments that they made is that 40% of all software internally done at Google is written by AI first, and then humans go in and clean it up and optimize it. And they said it in the context of sort of how they're using Gemini and their AI tools internally to really drive productivity. Of course, the other side of that is you need fewer, particularly junior developers, than you would otherwise.
So that is certainly the first step, isn't it?
It's positive that Google can use their own tool to drive efficiency, because if they can't use it, I don't know how we're going to use it. But it's going to have it's a double-edged sword. They're going to have pros and cons to it.
Well, I mean, it's truly the future is not distributed, right? I mean, we first saw this with Meta and how they applied AI to get past the sticky Apple problem on their advertising engine, right? From a targeting perspective.
Yeah.
So we first saw this with Meta. Now we're just going to see it across all of the Magnificent Seven. I mean, you watch the Jensen Huang BG2 pod thing. I mean, he's talking about they already have agents, assigned to different employees. So it's like the difference in the way that these companies are going to operate their business, I shouldn't say going to, are currently operating their business versus the rest of the world. And I think this is for the foreseeable future, right? Because when they roll something out to general availability, they have to have dog fooded it first to know that it's actually working. So yeah, I mean, I think that the really scary thing here is if we sort of put all these things together, productivity is actually going to really be at all-time highs. And so we're going to have GDP growth, we're going to have stock market growth, and inflation is going to come down, but layoffs are going to be persistent, right? I mean, because you're going to be able to do more with these machines. Wall Street is looking for the sale of it. They're not thinking about the destruction of existing businesses and how it's more of a winner take all kind of mentality. That's just not how they're oriented. They're not into the disruption business. They're into the growth business. So they're looking for where's that net new revenue line. But Google understands what they're doing here, and yeah, I think it's, look. I mean, what drove the 20% decrease in workforce at Dropbox? One, two things. Their cloud is getting eaten by Google and and all the other players, right? Or in Microsoft, or they've found a way to do the same work without those people. It's one of the two things, right?
Yeah, I think it's probably both.
Right.
I think their business is shrinking, because why would I store all my files on Dropbox if I can put them on another cloud and have AI tools supporting it? And then I'm sure, I don't have connections there, but I'm sure they are reacting to that challenge to their business by getting more efficient. I mean, I think we've been talking about this for a year, maybe more than a year. It continues to remind me much more of the internet change in business models and approach to just how the business is delivered than in kind of mobile phones and social media. There was a change where you ran your business differently after you got onto the internet than before. And I think AI is going to be that same kind of step function change. People will adopt it. Companies will adopt it at different rates. So we got a lot of earnings. So let's keep going. So
run through them.
Yeah. So Microsoft had strong results, but it was not as strong as expected on their AI tools. Their cloud is growing, but they have, they're the one that have been the most out front of our marketing co-pilot.
Yes.
So I think they got expectations maybe ahead of where they were. But interestingly, they on GitHub, so GitHub is owned by Microsoft. I know you know that, but maybe the whole audience doesn't know that. And GitHub now offers, as of yesterday or the day before, you can use any of the AI platforms, models, LLM models on GitHub. So they have opened it up to Gemini, Claude, Llama, whereas previously it was only OpenAI and the internal tools. So I think that's probably healthy, but it continues to be a competitive space.
Yeah, it's good, but it's not product market fit, right? It's just rolling out features. This is going to be an issue for Microsoft for a little while.
So then Apple really did well. They had huge iPhone sales, a record, and they've sold a lot of iPhones in other quarters. They haven't really. I mean, the Apple Intelligence thing is rolled out, but it's not that impressive. It's sort of a footnote. But they still were able to sell a lot of phones, which I was surprised about, but pleasantly surprised. They seem like they're doing well.
I bet you USB-C is a bigger feature than Apple Intelligence.
Right. And so then Meta, they did fine, but they don't have a cloud product, and their revenue growed, but at a slower rate than previous. And so they were sort of the outlier as not really making Wall Street happy. They are suffering. Their stock suffered on this.
They've had a really good 2-year run here. Yeah. I mean, 4xing. It's time for them to, for their growth to kind of pump the brakes a little bit. Last 2 years have been unbelievable for them.
Yeah, I mean, I think Meta actually is it's a much cleaner business model. Like they sell ads.
Yes.
They use AI to drive engagement and keep you on their various platforms longer so they can sell you more or better targeted ads. That is going to work. What they are not benefiting from is this rush to get on the cloud and spin up servers, and they don't have that ability to sort of sell picks and shovels to that gold rush. That could benefit them. They're not sort of expecting their cloud to take over. But they're still doing a lot of CapEx, and so can they keep up? I think they will, because they have it's a good advertising platform. I don't like it as a customer, but it's a good. It makes money.
No. That business will be fine, and they'll continue to find new ways to capture people's attention and continue to raise the rates on advertisers. I'm not worried about them, but it was time for them to get knocked down a peg in terms of the analysts for sure.
And then Amazon beat. They had 159 billion in quarterly revenue. It's hard to get my head around how big Amazon is. But they beat by a lot, and the stock is up. It just came out, about half an hour ago. They sort of round out the group with a big beat. So anyway, the Magnificent Seven and the tech is doing well. Moving to the venture side, so we have covered that the number of deals has slowed this year.
Yep.
But Crunchbase came out with a pretty good analysis of what they call Megadeals, which are capital of 100 million or more raised. And even though the total number of deals are down, the mega deals we're still doing a lot of mega deals. Now, you can see on the screen here, if you're watching, but I'll describe it. In 2021, we had sort of a historically high number, 800 deals, each of which that raised more than $100 million. That is an outlier. But last year, there was a little less than 200, and we've already surpassed that. So, I mean, it's almost like the venture version of the K-shaped economy. Like, if you get scale it's almost easier to raise a really big round in a funny way than it is to raise a $2 million round.
Well, the question is maybe not so much about scale, but maybe what the type of business is, right? Because my guess is that most of the mega deals are either AI or biotech.
Yeah. So here you go. Biotech and healthcare.
Yeah, but it's really biotech. I mean,
yeah. And then AI.
Yeah.
And biotech is it has its own big breakthrough technologies, and it also uses a lot of AI and technology. And then cyber is pretty expensive too, and energy and fintech. So these are capital intensive businesses.
Yeah, I mean, I guess the point I was trying to make though is that I think the biotech businesses and the AI businesses are not actually scaled businesses. They're just capital guzzlers. You know, they just require a ton of capital, and there's a lot of capital sitting on the sidelines that needs to get put to work. But it's definitely a barbell world. I mean, you know, a ton of deals at the seed, Series A, and then, you know, while deal count is down, these mega deals are propping up the total capital being deployed in the private market, right?
Right. And then a group of clinicians is launching a new VC firm. So this is not a VC deal. It's a new firm being created called Scrub Capital. I think maybe you know Chrissy Farr. You know one of them.
Yeah. Chrissy Farr has been, you know, a health tech journalist for a long time. She made her name initially at TechCrunch, then she went over to CNBC. Then she became an investor at Omer's, and I think she did that like during the pandemic. And so she was over at Omer's, kind of, you know, I think this is true. Because she was talking about it. She was like learning the investment business, right? You know, from inside of a very, very big investment firm. And now she's spun out and she's starting a pre-seed and seed fund. So, you know, she's directly in our space now, working with two doctors. So, I mean, I think this is great. She's whip smart. She knows the space and she's very well connected. Part of her value proposition is going to be media. So she's got a bigger audience than you and I do. And I think it's really smart to sort of, you know, focus on engaging clinicians into early stage investing.
Yeah. And I mean, it'll be competitive with us, but I think there's plenty to go around. Like I welcome new firms, especially if they bring doctors into the investment process, because we need more physicians helping to shape the innovation so they actually work.
Yeah. And if I had to guess, she's pretty smart. I would imagine she left Omer's on decent terms and probably is, you know, kind of at least a quasi scout for some of their growth capital, you know, aspirations. But, you know, to your point about, you know, being competitive in their space for all of us, I mean, everyone who's actually in the space knows none of these deals get done without syndication. So it's actually just another co-investor, you know, that we need to, you know, try to build a relationship with.
Yeah, their first fund's going to be 10 million. That's the target.
That's small.
It'll be small, and
small.
I think Omer's will view it as a scout fund.
Yeah, that's scout.
Okay, so shifting into policy, there was a lot of concern over the physician pay schedule for 2025. And so there's a group of legislators from both sides, bipartisan, trying to stop the cut from going through. It's not an approved, you know, law that could be signed, but they're trying to build momentum to keep the physician pay schedule where it is as opposed to cut it. I think it's worthwhile to track whether they can get it done or not. I don't know how likely it'll be in a lame duck session to get much done at all, but we'll see.
Well, it got cut last year, right? I mean,
it got cut last year, but it hasn't gone into place yet. It'll go into place in January.
Yeah, I mean, gosh, this is why innovation in AI and healthcare venture has a future, right? I mean, clearly the trend is the government knows it's out of money and it's going to make cuts because it has no choice. It can't, you know, the spending cannot continue to just run away like it has been, right? Just can't.
Yeah. And then on that front, the ACOs CMMI released the savings from the ACO programs for 2023, which is, they sort of are, you know, takes a while to gather all the information, but they were able to save $2 billion for that year, which is the highest it's ever hit. And so that, you know, the ACOs are starting to gain momentum, and it's exciting. I mean, we should have more people enrolled in ACOs, and then the ACOs will get stronger, so that I think these records should keep getting beat over time, I think.
Yeah, and huge opportunity for innovation here with MCOs. With ACOs. ACOs are pretty tech forward. You know, they're kind of like I don't know, value-based care, but like logical at scale. You know, and just really, really big opportunities for healthcare venture to play a role here.
Yeah, definitely. And aligning interests, I think, is good overall. Okay, and then the AMA is working on changing the reimbursement rules for remote patient monitoring. There's been,
Hallelujah.
yeah, it's so for 5 or 6 years, the RPM codes have been out, and you have to collect 16 days of biometric reading, so a scale or blood pressure or any kind of biometrics
Yep.
each month in order to bill.
I mean,
And
it's just
it's
ridiculous.
one that's hard to get, and two, a lot of the doctors and AMA came out with they don't necessarily need 16 days. You don't have to track your weight every day to see the trend line.
We have technology to model this stuff. Like,
Right.
You don't need that much.
Yeah. And so they haven't set it in stone, and it won't go into effect until January 2026. But it's looking like, I think there's going to be 2 tiers where if you get 16 days, you get X reimbursement.
Okay.
You get 5 or 2. There's debate between if it's 2, 5, or 8, you'd have a slightly lower reimbursement.
It seems to me once a week is probably what you ought to be targeting. I mean, you probably could get it done with 2 times a month, but like once a week is probably great.
Yeah. Yeah, I agree. And it probably does make sense to change the reimbursement level, but if you get 15 days having no reimbursement, seems like a little draconian.
Yeah, it's crazy.
Okay, so now we're going into the payer earnings. Humana beat earnings, and the stock's done well. So that's good. They've had a hard year, or even a couple years, so it's good to see them doing better.
Well, you'd like to say nowhere but up. I mean, almost down 50% over the last 12 months, just brutal.
Right. Yeah, I think basically the expectations have been cut so low that they was not such a high hurdle to beat. But still good that they were able to.
Yeah.
Cigna beat as well. But then their CEO made comments. He didn't say directly, but he made comments indicating that the Humana deal was less likely than people were talking about.
Advertising? Okay. Yeah.
And that's really buoyed the stock. It's been
well, I mean, he probably said that on earnings because they trial ballooned the acquisition, and the Cigna stock got slammed. So he was like, okay, that's not popular.
Right.
Yeah, and it's not. It doesn't make any sense. It's like when you and I were talking about it, we were like, hold on, aren't they selling HealthSpring? Aren't they getting out of this? Aren't they becoming a clean commercial like insurer, just like best of breed commercial insurer? Why would they get back into the space? I mean, you might say for scale, okay, but it's 2 different kinds of business, right?
Yeah.
I mean,
yeah, that's the question. I mean, they have Evernorth, which is their non-regulated business, similar to Optum.
Yep.
And they do a good job there. I know some of those folks, but it's much smaller than Optum.
Smaller. Sure.
I mean, everything's smaller than you.
Everything is smaller than them. Yes.
But yeah, that's the question. Can they be sort of a commercial insurance focused business with enough scale to be that pure play? Maybe.
I mean, they're publicly traded, and I think that's what the public markets are going to want from them. Bottom line, I think the public markets are looking right now and saying, you're out of the woods, like you're not in the crosshairs of all this crazy government pay stuff. Why the heck would you muddy the waters, right? Why would you do it? The economy is doing really great. Employers are mad about how much they have to pay, but they're paying. They can't really do much about it. They're not organized enough to do anything about it. So why the heck would you put yourself back in the line of fire with government pay?
Yeah, that's right. And that's why I went to Evernorth. If they're going to be a pure play like that, they're going to have to bring other tools, data, other support services to help their customers, their large employees,
Absolutely,
to be able to progress on this. Okay, then Aetna did not have an earnings release today, but they came out with a new health plan that is really interesting. It is designed to be 100% transparent. It's called SimplePay Health. And they are just showing you exactly what they are covering and passing through the bills in a much more transparent way. And I haven't seen the reports other than these, pictures they released. But I love the concept. It's way too complicated to understand, and so I think there's a big market if they can pull that off. It could be great.
Yeah, and I also think that this is becoming a trend of large old school insurers creating these new sort of mobile first, transparent health plan models. So I think it's good news for Aetna in a month that has been absolutely terrible for them. So that's a good thing.
Yeah. It's kind of 4 or 5 years ago, we had all these tech forward startups go public. We were kind of small subscale payers.
Yep.
Didn't work because they were subscale.
Mm-hmm.
And I think Aetna is kind of stealing from that playbook a little bit and bringing it to market, which is smart.
Yep.
Okay, moving to the provider health systems. HCA beat earnings, and it was a great set of earnings. The stock was down, I think, just because of the kind of the environment, the growth, and are they at the peak of earnings, and is it going to turn? Kind of turn. I didn't see much in the way of problems. They beat earnings, they reaffirmed guidance, but the stock was down. So Tenet also beat. But then they have a much stronger outpatient outpatient surgery center and facility.
The ASC business.
ASC. So they have more kind of growthy aspects to their business, and Wall Street like that much more.
Tenet's a beast.
Yeah.
In terms of for-profit healthcare, Tenet is just really well positioned. Kind of visionary for them to have done the that acquisition when they did. How long ago was it that they bought USP?
That was probably 6-7 years ago. They bought Vanguard and USP like a year, like back-to-back years, and really changed the business.
They look brilliant for having done that. That's for sure.
I think if Tenet is a little more volatile, a little more beta, like if we have a downturn in the economy, I think they'll go down further. But then in good times, they go up further too than HCA.
Well, I think the thing is that the mainstream hospital business, just because of labor pressures, if you've got a sizable percentage of your overall mix that is ASC, it's a nice balance, right? It's a nice offset to that run-of-the-mill inpatient business. It's pretty predictable, and as long as the volume is good, it's a good business. But margins matter, and labor is tough, and Wall Street analysts know that. They know the labor issues that are out there right now.
Yeah, and HCA has a lot of outpatient surgery centers, but they have built them organically. It just takes longer to do that. So
it takes longer.
It's not the same percentage of their revenue.
That's right.
Okay, moving over to pharma. Pfizer did well in the quarter, but they are struggling. So their stock was down. They don't have a lot of growth engines.
Yeah.
So they met the quarter, but they just don't have a big pipeline of exciting new products. And they're under pressure from this outside,
starboard.
Activist. Right, exactly. So Lilly missed earnings, and so they, suffered today. Their GLP-1s are doing great, but they did not make Wall Street happy. So I don't exactly know why they lowered guidance, which I think is, probably the reason that people were upset with them.
Yeah, I think we've talked about this with Emily. I think the compounders are eating into the, that they're flooding the market. It's becoming, harder to control the channel. It's becoming harder to control the channel, and it's a relatively new drug that they should have more control over, market share, just traditionally from a pharma perspective, but the compounders are really kind of changing the game this time around.
Yeah, and there's a lot of different flavors of GLP-1s.
Yep.
That you can pick and choose around. So that it's different than like Humira or something where it's like you just one drug is all you can use. There's lots of options, whether it's a compounder or there's 4 or 5 brands for different takes on GLP-1.
Yep.
Novartis did well. They don't have GLP-1.
Not to my knowledge. I mean, they might, but I don't know the brand.
I don't think they do. But they beat earnings and raised their full guidance, and so the stock was good.
Okay.
GSK cut their vaccine sales outlook. I don't know
US
why.
weakness.
Yeah, I mean, I don't know why anyone thought they were going to sell a lot of COVID vaccines in the US this year, but apparently they thought they would. They predicted they would, and they're not doing that. So they were down.
Well, they're not in the US, so maybe they have not been able to read the room as well.
Right. Yeah. So those are all the earnings. So we had the tech side was up. Hospitals were, hit earnings, but mixed based on sort of how their outpatient was. Payers they met earnings, but were sort of, mixed based on their positioning in the market.
Yep.
And then pharma in general, sort of down, flat to down. I mean, Novartis was the one bright light in the pharma space.
Mm-hmm. Mm-hmm.
Oracle held their Oracle Health Summit in Nashville this week. I went to it, and they unveiled their new EHR, sort of the next version. They're calling Oracle Health. So the Cerner brand is gone, and I went to this event really not expecting very much. There wasn't a lot of fanfare. It was a pretty small. I mean, it was at the Hyatt here. It wasn't at the big conference center. But it was really impressive. It's not released yet, so it's hard to tell. But the firepower, like Larry Ellison was here, and they had all of their executives here. We'll link to the Fireside chat. It's about an hour long. And I think worth listening to. My takeaway was that Oracle has turned its attention to healthcare, and they are redesigning the Cerner platform almost completely. I mean, it is sort of, they're trying to embed all of the existing Oracle suite of tools. So they have a lot of kind of ERP tools, HR and payments and all that stuff. Yep. They have clinical trials and biotech existing platforms. They have a lot of security and privacy and cyber assets. And then they claim to have invested a lot in AI and voice recognition. And they're integrating all of that together to create really a new approach to a healthcare platform. I think it's going to be not that similar to Cerner. It's going to be much more a productivity tool. It'll have kind of your health record information, but it's going to be much more of a productivity tool for physicians and nurses, where you don't have to key in a lot and it automatically syncs to the billing department. So it was an impressive vision. Now, whether they can pull it off or not, I don't know, but pretty exciting to see someone with enough resources to be able to challenge Epic and, maybe have a competitive product, which, Cerner, I don't think really did.
Well, let's talk about some exciting things for us. First of all, Oracle Health moving its global headquarters to Nashville. Oracle moving its global headquarters to Nashville, but clearly the strategic imperative there is to be in the center of a healthcare city. I think that this really feels like the definitive next phase of Nashville as a healthcare city, right? I mean, we spent the last 60 years as a healthcare city really because of hospitals. Mm-hmm. Change Healthcare, which you had a lot to do with, was sort of the beginning of the seed change there. Yeah. But you look at all the capital players that have grown out of there. Credit to Frisk Cressy and the big hits that they've knocked out of the park. But Oracle coming to town is a big deal, and I think today, the Oracle Health Summit wasn't that big, really, because the office is not open yet.
Yeah, the office is not open. The product's not live.
Yeah.
So,
Give it 2 years though, right? I mean, and I think it'll be a very different story. So that's really exciting. The other thing, which is a little bit of, I don't know if you want to call it inside baseball, but just sort of Nashville knowledge, is Ascension is on Cerner, and the St. Thomas Health System, which is Ascension's Nashville outpost, is like their designated innovation health system. Fahad Tahir is the
yeah,
CEO, good friend of ours.
he's great. So they might, I mean, there's going to be 5 to 8 customers next year they launch with.
I bet Fahad
Haven't
is one of
released
them.
who that'll be yet, but it'd be great to have St. Thomas.
Fahad has not told me, but I cannot see a world in which Fahad is not at the edge of this kind of innovation. It would just be shocking to me if that was not true. So
yeah, and I think the other thing that they really kind of brought out that we know, but I haven't heard Oracle talk about so openly, is the need to sort of understand the federal regulation and reimbursement and align with that. Of course, they have Sima Verde, and they also were talking about Nashville's connections in that light. Which yes, we have health systems, but we also really understand kind of how the reimbursement evolution needs to be followed and kind of build innovation alongside that. So good to see, and we'll have to follow it for next year.
It's awesome.
Okay, then you found this summary of cyber privacy things from McDermott, which is a law firm, really strong law firm.
Yeah, and this there's nothing really to report here other than to say we're going to include a link in the show notes to this email that they sent out. Hat tip to Judith Bird at the GNVCA for sending this over to me. But it's a really nice rundown of all of the different regulatory efforts that are underway across the country, happening in California, happening in New York, et cetera, around AI and healthcare data. So if you're interested in just kind of having a nice rundown of, hey, what is underway and what jurisdictions and what are legislators concerned about, this email is a really nice rundown for that. And so we'll just include the link. And I just thought it was a nice service from McDermott to do this roundup, and it was worth sharing with our audience.
Yeah. It's almost a reference document where you could refer back to it too.
Yeah, really cool.
And then we'll end on AI with Elon Musk. So he's raising more capital. I think it's going to be $5 to $8 billion for his AI fund called XAI. I was really not giving Elon that much credit just because I'm tired of X and all the political stuff, until I heard the podcast with Jensen from NVIDIA, who, on the podcast, he called out how impressive Elon's cluster, which is in Memphis here in Tennessee, is. And that just got my attention. So now he's raising capital to sort of build on that. And Elon is a great leader of engineers, great, and, big builder. And so it's just worth tracking, really.
Yeah, and also it's a nice sort of closed loop on your mega deal story. I mean, this is a mega deal.
Yeah.
Right? $5 billion for an AI company. How much revenue are they generating? I mean, none. Right? So it's scale, but it's scale for the promise of the future. And really, Elon. I mean, I think one of the most incredible things is, even though he has destroyed so much value at Twitter, he is undeniably such a marvel at engineering that it doesn't matter. He can still raise billions of dollars for an AI company, right? It doesn't matter. You can just look at what he's doing with SpaceX and Starlink and Tesla, and you can just sort of write off X as like this weird fever dream he has with politics and Trump and sort of the town square, but you can't deny his engineering capabilities.
Yeah, I think that's right. And good. I mean, for me, for all of us as users of AI, having more models out there that are pushing the frontier is a good thing. And not having it in only 2-3 systems is probably good for everyone.
So. Yep. Well, Vic, thank you for putting the show together today and running through it quickly so I can make my flight back home tonight. I appreciate it.
Yeah. So safe travels. Happy Halloween. When people listen to this, we will be past Halloween, but you're flying on Halloween night. So,
and for the listeners, if you've been along for the journey, next week, yes, it is the election, but forget that. Next week, episode 100.
Yeah, big milestone.
So we've got a big we've got one more guest episode, and hopefully y'all listen to the David Dill episode that came out earlier this week. Fantastic having an opportunity to spend 45 minutes with David and listen to his vision and what him and his team at LifePoint are doing. I think it was really inspiring. We have one more guest we're going to roll out next week, and then episode 100 after the election.
Yes. So it'll be great to hit 100, and I'll be happy the election's over. Both.
Yes.
I think I'll be celebrating both probably equally.
All right, man. Well, look, great show, and talk to you next week.
Okay. All right. Safe travels. Bye.